Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun, looking at charts, like the chart behind me, which is of GameStop, ticker symbol GME. And so here I am recording this on Friday, July 19th, after the market has closed for the week, and GameStop closed at a price of $24.97, being down a little over 3.5% on the day, and unfortunately closing the weekly and monthly contracts just below $25 a share. I don't know exactly what max pain was for the day. That refreshed to next week before I was able to check it. But I imagine it was either 25 or 25.50. We did close below that, so that is pretty disappointing, especially because over the past week we did hit a high during market hours of 29.79 on the 17th, so on Wednesday. But if we look back actually on the 16th during after hours trading, we hit a high of 29.99, so getting pretty close to $30 a share. But we did get rejected. We did pull back a little bit. And so I'm curious to see where we do settle out at. And before I get into this yellow retracement here, I wanted to take a step back to look at some of these prior retracements that could offer some insight into where we will be settling out at. And so looking at this first retracement here, going from the low of 9.95, which was hit on April 16th, and going up to the market hours high that was hit on May 14th, that being at a price of $64.83. And so from that retracement, we can see, not only the golden pocket here, which straddles $30 a share, which we just got rejected from, but mainly I wanted to point out the 786 here at 21.69, as we did pull back, breaking lower than that over the course of about a week, residing below it, but that did serve as a pretty good approximate dip buying level, as we have been putting in higher highs following this low of 9.95, and then pulling back to a low hit on May 24th, which was at a price of $17.70. I do also want to note, though, right around that level, I have this blue line marked here at 1746. That was the close from May 10th, which preceded the big move to the upside here. So there is a gap down to that level, but I don't think we're going to be filling it. I think that gap will be left behind. And so the reason for that is because these other retracements that we've seen, not only this one when we pulled back to the 786, but if I zoom in here and we look at this retracement, this red retracement here, going from that low of 1770 up to the high of $48 a share hit on June 7th, we can see that following that big move to the upside, we pulled back to approximately that 786 at a price of 24.18. We did get, a couple wicks below it, and we did get a few candles below it over here, but that did act as a bottom, a good dip buying opportunity. When we did pull back to looking at this orange retracement to the low of $22.31, which was hit on July 1st. And so from that orange retracement, we can see that the high from there is actually the 236 that we recently hit. If I actually do throw up, in addition to the 236, also the 382, we can see we didn't get up to that 382, but we did get up to the 236 at $28.37, breaking just above it, almost getting to $30 a share, as I had mentioned. And so considering those retracements, and that for this one coming to the downside here, the 786, we retraced to that, as well as, this white one, we also retraced to the 786, if not lower. And so I feel like we could be retracing to that level now. When I had initially drawn this retracement, which I drew up yesterday, I left a 50% retracement on there because I thought, well, maybe Thursday's low was a fake out break below that level, which is at 26.05. We closed on Thursday at a price of 25.88, so just below that level. I thought maybe we could get a bounce today, but following that more than 7.5% down move on Thursday, we continued lower today on Friday, coming down about 3.5%. And continuing down to actually that golden pocket here, the range between the 65% retracement up to that 618. That represents prices ranging from about $24.93 up to $25.17, right around $25 a share. We closed within that golden pocket today. But since we had previously pulled back to the 786, I could see that happening again, with that being at a price of $23.91. So maybe we see some further downside from current price. That would represent about 4.25% move to the downside before we potentially find a bottom there. However, one thing that would be discouraging about that is that we have broken below this uptrend that I have drawn here in white based on these two pivot lows. As you can see, price did close the week below that, so not looking so good that we weren't able to hold it. But regardless of that, we are still putting in higher lows as long as we don't close below or break below 22.31. If we do hit a price lower than 22.31, that could be negating the stair-stepping pattern that we have been forming on the way up. But, like I said, I think that getting to around $24 a share, maybe we see a pullback to that level over the course of the next week, and that being a great dip buying opportunity before the next legs up. And one retracement that I didn't draw previously was going from the high here to the low to kind of see where we got to on this peak that we recently saw. And so if I do draw that retracement from the high of 24.83 down to the low of 1770, we can see that the level that we've retraced to is actually the golden pocket. So ranging from the 618 up to the 65% retracement, we hit a high of $48, which is right in between that range. But getting to the 786 would be returning to a price of $54.74. So I could see that happening in the coming weeks, if not months. But I do think that we need to see a little bit more downside, potentially getting to around $24 a share. But it is also possible that we find the bottom at the golden pocket and that this is a fake out break below this uptrend that we might be reclaiming Monday, Tuesday next week before starting to move higher, as it was, looking pretty strong by the middle of the week, getting up to nearly $30 a share. We did lose that momentum, pulling back about 16% following that high around $30 a share. But, I think that any dips that we see over the next few days or next week will be nearing a bottom around 24, if not 25, and we could be seeing some violent moves to the upside, potentially getting to triple digits. So that is what I would be looking for in the months ahead, but in the week ahead, I would be looking for dip buying opportunities. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.